Now looking at the equity market, maintaining that upward trend, trading above that psychological level of 3,400. Talk us through trade today.
Well, I think by and large we've seen the increase in prices that started sometime late last week, persisting all the way up to today. And I think we've also seen, some of the shares that have gone up. Uchumi, for instance. I think investors are basically, looking at positioning themselves for the long term, because there's a general feeling that it's operating far below its potential, especially when it ran into problems a while back. So I think by and large, when you look at the trading trends today, they are more or less in line with fundamentals of the underlying companies. Kabasid, again, a very strong company when it comes to payment of dividends. The same thing also applies for BAT. On the losing side, I think Eveready is really no surprise, and I think it might not be related so much to any emerging fundamentals, but so much about the volatility that the company normally experiences, because trading at that range, it's normally considered to be a cheap buy by speculators, and generally tends to be very, very volatile. So I think by and large, the activities today basically reflect what, the situation on the ground and what investors expect to happen going forward.
Looking at that psychological level, the market sitting above that 3,400 mark, are you seeing this bull trend continuing in the coming weeks?
It's really hard to say. It's anybody's guess for now moving forward. I mean, given that, share prices generally tend to be unpredictable. But in our view, we think the trend that we've been seeing for the greater part of this year, a short-term rally and then followed again by some profit-taking, is likely to continue going forward. And this particular episode might not be an exception, especially bearing in mind that most of the factors that have been limiting the upward, sustained gradual recovery of the equities market are still at play, key of which I think is high inflation and also high short-term interest rates, which are basically prompting most investors, at least institutional investors, to take a cautious view as far as equities are concerned, in favor of fixed income securities because of the attractive yields they're offering, most of which are actually in real positive territory.
Taking a cautious view on equities, looking at East African Portland Cement, the shares have been reinstated for trade today after a 2-month suspension. Is this a stock that will see investors really plowing into it given this trading?
I wouldn't really look at it in that direction. In any case, I think it's one of the stocks that, if you look at the performance of the NSE, let's say in the last 3 months that the company has been suspended, 2 or 3 months or so, it's one of the few companies, I think, that was saved from, the bearish conditions that have been prevailing then. So what I expect actually initially is a most likely a correction to reflect the factors that have been playing out in the last 2-3 months, and also again to factor in the challenges that the company has been going through, key of which I think includes corporate governance issues. There's a lot of interference from government because of their shareholding, and there seems to be a lot of turnover as far as their CEOs are concerned, and also other board members. I think in the last 7 years or so, it has had the highest turnover in terms of board members and senior management as well. So I think it's a stock that most institutional investors perhaps would want to give some distance in line with these factors. And of course, on the financial side, they have a yen-denominated loan that occasionally turns against them, resulting in substantial capital losses, exchange losses that more than wipe out their total operating profits. So it's not really a stock that one would probably immediately jump into given the current situation, in addition to also the company citing higher production costs and increased competition, likely to result in a 25% knock off their earnings. So it's probably a bit of a tricky stock to get into. There might be other favorable buys right now.